In 2017, I invested $10,000 in a portfolio of stocks in the US. I sold it last week for exactly $10,000, the same amount. Yet I made a return of almost 10% annualized on my investment. Relax, no magic here. When I invested, the USD INR exchange rate was rupees 65 to the dollar, and today it is rupees 82 to the dollar. Interesting, isn't it? International investing does add a layer of complexity in the form of exchange rates, but it can be a great tool for diversification for any investment portfolio. Today, there are many international funds that cater to exactly this need by offering access to your choice of markets, instruments, and even the level of risk you may want to take. My name is Neelabh, and welcome to this edition of Kuvera Insights. Today, we will try and understand from an expert what international funds are, who should invest in them, and what should one expect. Joining us today is Shane Vaz, AVP Products at Axis Mutual Fund. He has almost 10 years of experience in financial services, 5 of which are with Axis Mutual Fund. He holds a Master in Finance from Grenoble Graduate Business School, and he joins us today to develop our understanding of international funds. Hi, Shane. Welcome
Hi,
to this
Neelabh.
discussion.
Thanks for having me.
Great. So we'll jump right in with our set of questions for you. So could you briefly throw some light on what are international funds and why should I care about investing in them?
Sure. So, hi, good evening, everybody, and thanks for joining us. Uh, International investing is has been around for a while now, and from the early 2010s, you've seen that the mutual fund industry made an attempt to actually get an international feel to portfolios. With erstwhile Franklin funds, then the JP Morgan funds. In 2018, we launched our own sets of funds. So it's been around for a while. Why is international funds or international investing very, very important? Is because if you look at where we've been, today India accounts for just 3% of the entire listed universe. While we look very good in isolation, and especially now that we're doing so well, India is the fastest growing economy, so on and so forth. A lot of what we consume, a lot of what we participate in our daily lives is actually international based products. So whether you brush, you probably use a Colgate or a Sensodyne toothpaste. You may, for kids, you may have Bonvita, so on and so forth. So I mean, in every walk of your life, you have a lot of internationalization, globalization that is part and parcel of your life. So why shouldn't investing be, right? So, and hence we've kind of rebuffeted our focus towards getting people investing in mutual funds, getting people investing in the equity markets, and second, we're getting them to then explore international markets. So that's what our platform, at least at Axis, has been in favor of international investing. And of late, we've been talking to a lot of partners. Kuvera is one of them.
Great. So tell me something. You mentioned that there are a whole bunch of international funds which offer access to international markets.
Yeah.
Why should I even invest through a mutual fund? Isn't there? I have an option to buy Apple stock, for example, directly on the US exchanges. Why should I buy a mutual fund?
Yeah. So that's actually a very pertinent question, given that there's a whole range of solutions that fintechs and a lot of other stockbrokers and all of that have been kind of building up. But a couple of problems with that. Today in India, you've got a limit to how much you can invest overseas directly, which is capped at around $250,000. Also, there are a lot of challenges and hurdles that you have to go through in terms of getting the necessary documentation, transferring funds overseas, then actually going and investing, paying your relevant brokerage taxes. On the return leg, you need to again pay certain taxes and getting your money. It's very tedious. There's currency charges, and then again you get the money back into your account. When you use something like a mutual fund, given that we are institutionally set up, we have custodians in various global hubs, and we've got brokerage agreements with a lot of these globally renowned institutional brokers. We have a more seamless setup uh, to kind of transfer money or to kind of pool assets in India and then transfer them overseas, deploy them well, use professionally sound institutions to do that, professional managers at our end who also evaluate what investment opportunities are there. And then, as and when you need the money, you get it back in 3 or 4 days after you kind of exit your investments. So it's a more seamless approach. Clearly, there's a lot less documentation because you just do all of that in India as an Indian resident, and we take care of the rest. So
Got it.
that's why it's beneficial.
So yeah, so interesting, Shane. So what effectively you said that investing through mutual funds, just like in India, it is more convenient than investing directly into making a stock investment.
Yeah.
It's probably also faster. You can do it at a lower cost because
Yeah,
your
correct. I actually forgot to bring that up. Today, the stock price of, say, an Amazon is, say, $1,800, but
right.
my NAVs are something like $10 or $20. So I still give you that exposure without you going and spending that much more on concentration and buying a single stock.
Right. So, and in addition, I also, by lower cost, I also meant there is no sort of funds that you need to transfer to an international market, to an international broker. So, in
Yeah.
that sense, also, these frictions are much lower. Probably even, the taxation aspect is simpler. You
Yeah. Yeah.
probably will not need a CA
Of course.
to do your
Yeah.
tax filing. Uh, okay, so coming on to the next question, and just sort of trying to cover various aspects of international investing. Um, so the point that you made on diversification, um, what kind of allocation to an equity portfolio should one think about from an international markets perspective? Is there a right number, or does it depend upon the profile? So put the same question differently: what kind of investor or who should think about investing in international funds?
Okay. Let me give you two answers. Okay. If it was me, for example, I understand markets. I track them on a day in and day out basis. I love going on international holidays. I do a lot of online shopping globally. So for me, I would typically put in a lot more uh, portion of my funds in an international fund. Why? Because I would dollarize my investments to kind of match the dollarized expenses that I would typically have. Tomorrow, when my kid grows up and they want to go and study overseas, I would put in another fund and dollarize those investments over time. Because, like you pointed out in your introduction, just by staying invested in dollared assets, even if the dollared assets don't grow, by virtue of the currency depreciation, I keep losing out, right?
Right.
So to protect against that currency hedge itself, I should probably be investing more frequently. If, for example, I'm a novice investor, let's say, for example, someone who's just entered, this is not your first fund. Your first fund would be something like a large cap equity fund or an ELSS fund, which aims to meet your goals of testing the waters in
Right.
equity mutual funds in India, and at the same time maybe giving you that tax benefit via an ELSS or an ATC benefit, right? So this is not your first fund. This is maybe your second or third or fourth fund. And
Understood.
mind you that this is a very goal saving oriented fund. So
Right.
use this for goal saving.
Right. So when you say goal saving, and interestingly, that is what we at Kuvera focus a lot on in terms of visualizing what your financial goals are and then to plan for them. So I think uh, to put what you said into a sort of a brief, this large long term portfolios
Yeah.
should think about having some allocation to international equities. And the point that you
Yeah.
made about familiarity with international markets or international products,
Yes.
I think we are at a stage now where you can probably say that about 90% of the investing population
Yeah.
would be familiar with those markets. So you're practically saying everybody should have it in their portfolio as long as they
Yeah.
have
Why
some
not?
experience.
Why not? We are speaking to each other via Zoom. We're speaking on maybe a Microsoft or an Apple laptop. We are already experiencing these guys, right? So why
No,
not just invest
absolutely,
in them?
absolutely. So great. That makes a lot of sense. In terms of on a practical basis, right? Uh, I don't understand. Let's say US equity markets. I don't
Yeah.
understand US equity markets, or I don't have the time to sort of track US equity markets. In India, being in India, I have some visibility of Indian equity markets just by virtue of seeing the first page of the newspaper. I would see some information. I would get some information about markets, know which direction things are moving in. Uh,
Yeah.
aren't don't I need to know about the markets in which I'm investing in? Do I, or can I just invest and forget about it?
Yeah. So I mean, Neelabh, I don't think you give our viewers a lot of credit. Uh, the Gen Y, the Gen Z, whatever we call ourselves now, the millennials and all of that, we have that we have that urge to kind of go and Google and read and resource. We're very resourceful that way. So in essence, if I was to talk about it, I'm sure 10 other people who've never heard about international investing would quickly go and do a Google search that, okay, ye kya hota hai, wo kya hota hai, right? So the same way we go and buy phones and stuff. But for the absolutely uninitiated investor, your first investment is, like I mentioned to you, a domestic fund. Once you understand the domestic fund, you understand a lot of modalities around it. जैसे ये ऊपर क्यों जाता है, क्यों नीचे जाता है, so on and so forth. कंपनी क्या होती है, अर्निंग्स क्या होते हैं, पीस क्या होती है, various things. You watch a TV channel, you hear a lot about various companies, so on and so forth. The same thing just gets extrapolated to the international markets. For example, just yesterday I was reading about how the US is actually buying these pills to prevent against nuclear war. So there's a company called Amgen. I did not even know about this company, right, till very recently. तो मैंने गूगल में पढ़ लिया एमजन क्या करती है वगैरह वगैरह, एंड आई फाउंड आउट ओके इट्स एक्चुअली पार्ट ऑफ द Nasdaq 100, which is great, right? I mean, I was not aware about it, but now
Right.
today I am a little more aware, and that is the process of any investing journey. So you invest, you read a little, you invest again, you read a little, so on and so forth, and that's how the journey is made.
Absolutely. So no shortcuts, just like any other
No shortcuts.
investment, and all the risk factors apply.
Yeah.
Uh,
Yeah.
you must do your homework before taking exposure.
एंड वो मजा आता है, राइट? आई मीन आपका पैसा ग्रो होता है तो आपको ही मजा आता है, राइट?
Right. So the important point is, don't treat it as something exotic and ignore it. Do consider it,
Yeah.
and then decide whether you want to go ahead or not.
Of
So,
course. Yeah.
but it may take a little bit of homework because it's a market that you may not be familiar with. But beyond
Yes.
that, yeah, do think about it.
Yeah.
Understood. Understood. So, you mentioned one point, and even in the example that I gave, I chose a period where 2017 to 2022, dollar moved from 65 rupees to 82 bucks, right? 82 rupees today. uh, that's not going to be, it's not evergreen, right? It's not and it's not a one way street.
Yes.
So according to you, what sort of, can this equation be turned against me? Because as long as rupee continues to depreciate, um, even if the my portfolio dollar value remains the same, I will
Yeah.
continue to make some return on my
Investment.
investment, a
Yeah.
non-zero return on my investment, because my investment is in rupees. Uh, but that is the, that is also a, do I need to have an understanding of the relationship between rupee and dollar? Is that an added complexity? And it's not going to be evergreen, right? So what
Yeah.
are some of the signals that I should look out for?
Sure. Uh, in terms of when you invest overseas, currency is a secondary aspect that you have to cover. But given the way, at least up until now, how the relationship between India vis-a-vis the rest of the world, we've typically had a depreciating currency over time for various factors. Monetary policy theorists have certain views. There is something called the interest rate parity theory. I'm not going to bore you with all the complex theories, but in general, the way the Indian economy functions vis-a-vis rest of the world, our currency tends to depreciate anywhere between 4 to 6% per year, but it is never in a straight line. So, you said 2017 to 2022, you saw 10% CAGR, right? But if you look at it from 2017 to 2019, actually the currency did not go anywhere. On the
Yeah,
contrary, the currency actually appreciated a little bit for a brief period of time.
that's right. Yeah.
Right. So in that period of time, actually, if you had invested, you would have lost money on account of currency. But one has to understand that in the broader scheme of things, when you're investing in global markets, you are investing to grow. So your focus, especially in equities, is to identify the correct set of stocks, the correct set of investment vehicles, which will allow you to grow. The currency is your bonus,
Right.
right? So please treat the currency as a bonus. Don't treat currency as, and we are all fairly amateur investors when it comes to international markets, because we've not really seen the waves. We're a new breed of investors, at least from the world stage. So in that sense, treat currency separately. There is a currency related risk. That risk is in our favor at this point in time. Tomorrow, if there is a complete geopolitical pivot, we don't know where it will go. So keep that aside for a minute. But from an investing standpoint of view, focus on identifying an opportunity set which will make that money for you, same as how you do that in India.
Right.
I hope that addresses that query.
No, it does. It does in part, at least.
Yeah.
But I know that some of the some of what you mentioned is outside a scope of a short discussion like this.
Yeah. Yeah.
But I think the subtext clearly is that keep an eye, keep your eyes
Yeah.
and ears on your investment. Keep
Yeah.
monitoring it, maybe on an annual basis.
Yeah. So,
But
Neelabh, if I just like to complete actually, in general terms, like I mentioned to you, 4 to 6% is the variance. Uh, so in any way, when you're investing in international markets, you're investing with a 3 to 5 year view. So a 9 out of 10 times you're going to see the benefits of a currency devaluation. So let's give our investors some comfort. So currency is not like a euro. Or our economy is not like something like what's happening in Europe, right? So it's not
right.
going to flail away overnight and completely destroy our lives. But at least that's the belief.
Yeah, so I didn't, what I meant to say was that you don't need to be additionally worried.
But yeah, the worry
And
should not be there.
like you monitor your normal mutual fund portfolio once in a year to sort of, let's say, rebalance your portfolio, rebalance towards your ideal asset allocation. This should just be part of that portfolio as another instrument which allows you to keep your portfolio diversified. It allows you to benefit from, because a lot of times markets and currencies may be counter cyclical. So
Yeah.
there will be offsetting benefits if Indian markets are being benign. There may be some activity in international markets where you can, where if you are invested, you will get an advantage of that,
Of
or
course.
vice versa.
Yes.
If international markets are trending downwards, there may be a positive movement on the currency side
Yes.
because of inflationary differences. So there are
Yes.
various aspects at play which you can monitor, which you can keep an eye out for. If things go out of range, then you need to rebalance. Otherwise, you need to stay put and stick to your plan.
Yeah. Yeah.
Uh, so that's very interesting, and thank you for that particular insight. Now coming to my next question, I want to understand. Like in India, we have this over the last couple of years, there is a definite increase in allocation of portfolios, investment portfolios towards passive funds.
Yes. Yeah.
Um, it was a trend in the US. Now it has caught on in India as well, though it's not as allocations are not yet at the same levels as they are in international markets. But from the perspective of an investor sitting in India, uh, what are the advantages of investing in passive over active, and should a portfolio, international funds portfolio, comprise of one type of fund over the other, or should it be a mix of both?
Sure. Sure. So, two sides to this, Neelabh. One is there is a scope for active management, both domestically and internationally, as well as for passives. But unfortunately, in India, given the local regulations, most active funds that are investing overseas today are constricted because of limits that have been hit uh, for the mutual fund industry. So, as it stands today, most of the international funds that are available for you to invest in are passive oriented funds because those
Right.
limits have not yet been hit.
Right.
Uh, there is a lot of money that Indians have put into active funds that invest internationally, and they have done quite well as well. But incrementally, passive funds is a clear route. And given today's context, wherein the global markets are down 25, 30, 40%, a passive allocation is not a bad idea because passive, in addition to the various opportunities it offers from a thematic perspective or from a market based perspective, is very, very transparent in nature. Let me give you an example. uh, a mutual fund typically in India would issue a portfolio once a month,
Right.
right? Maybe once a fortnight for certain debt schemes. Internationally, however, an ETF will give you its portfolio every day. So every day you would know what you're buying and what you're holding, how you want to trade it. You can buy it on an exchange at a fair price because an indicative NAV is given to you, and you can participate at the market level, right? So a passive product in itself is quite efficient in kind of allocating to international securities, especially at this point in time. So, if for investors who are watching us, if if you have an opportunity to invest in international markets through an active fund, consider that. But given today's prevailing situation, which is very difficult for you to invest in, you could consider a passive strategy, which gives you all of those benefits and then some more. So there are both sides to this, and it depends on each investor's prerogative which one he should select.
Right, right. So I think there are two points that you bring out. One is because of certain structural regulatory constraints, the amount of investments that can go into active international funds is restricted, and we
Yeah.
are probably already beyond that limit. So no
Yes.
fresh funds can be allocated. Those funds are not taking subscriptions. So in
Yes.
that sense, these are the only options that are available.
Correct.
Having said that, what you also said is that on its own, even if there were both options available, you should consider both because they will serve different purposes.
Different
Uh,
purposes.
and on an overall level, they will counterbalance each other to a certain extent. They may not be counter cyclical, but they will offer
They will be complementary. Let's put it that way. I think they will be complementary.
Right.
Given that the active fund will effectively try to generate an alpha, while
Right.
a passive fund would be more of a tactical allocation approach for investors.
Understood. Understood. So this has been great, Shane. Very useful insights. I think this is a space which has seen a tremendous amount of interest over the last couple of, I would say almost a decade now.
Yeah.
Last few years, we have seen a lot of options available to investors to invest directly, also internationally. But the bottom line that remains is that mutual funds offer the most convenient way, probably the fastest way to get started in having an exposure to international markets, on a plain and simple direct equity versus equity mutual fund comparison. All of the same, all of the arguments that are in favor of mutual funds in India will also hold true for international investing. In addition, you have to figure out greater frictions. There
Yeah.
may be cost of transferring money outside. There may be more complicated tax calculations. There may be simply accessing your funds may become a challenge, that you will need to wait for a certain amount of time to before the money can come back into your bank account and
Yes.
become usable. um, Apart from these, outside of these frictions, in general, the concept of investing internationally is well suited for the globalized Indian, which is almost all of us
Yeah.
now,
All of
right?
us. Yeah.
And it has a place. International investing does have place in most investment portfolios that are investing for the long term. Of course, depending on the investor's risk profile, their appetite for risk, and even their attitude towards risk.
Yeah.
um, while you mentioned that there are two factors, one is the market movement and the other is the currency movement, which one should think of as a bonus. I would also like to draw a line of caution here and say that they can both act for you, and it can be a bonus. They could both add against you as well. So from a
Yeah.
risk perspective, one should be conscious that they may in general be at a slightly higher risk exposure when you are
Yeah.
investing in international markets, because
The
of
implied market risks are materially higher. Yes,
are
you're right.
materially higher.
Yes.
Uh, but within that framework, it is, and if you want to leave a message for the investor, would you say that, definitely consider this as to be as part of your long term portfolios, uh, and do your homework before you invest?
Of course. Yeah. Yeah. So I mean, well articulated, Neelabh. I think you've said all the points that I actually wanted to. A couple of points that I would finally like to leave you with is, like I started my conversation. We are, regardless of what happens. What the last 40 years have been. There has never been a year wherein there has been no bad news. But in spite of that, you've seen you've seen global markets and Indian markets do very, very well for
Right.
investors, for wealth creators. And if you are coming into the markets with an intention to create wealth, there is no this one is wrong or this one is right. If your research process is good, if your portfolio management is good, your portfolio allocations are good, you are bound to make money over the medium to long term. And we as mutual fund providers, it's our job to give you those avenues. And hence our focus, after completing the mutual fund basket domestically, has been to give you an international offering. And as mutual funds, the banner is to simplify everything. So you don't need complex trading platforms, you don't need complex tax requirements, you don't need complex execution strategies. Come into a mutual fund, we make your life simpler. Leave that entire thing to us, and just enjoy the experience. That is the end story of why a mutual fund works the world over.
Right. Right. So I think, with that, we can, conclude our discussion today. It was great speaking with you, Shane. As this discussion is rolled out to our investors, we may get back some comments or questions from them, which we will first try to answer ourselves, but otherwise
Sure.
we will pass them along to you.
Definitely. Definitely. Thanks for having
All
me.
right, Shane. Thank you so much. Thanks so much for your time today.
Bye bye.